Good morning, everybody. Welcome to the Flow Show, Tuesday, 15th of October. Hope you are all doing fine and dandy. Enjoying markets as they're moving at the moment. Morning, Kay. How's it going, mate?
Good morning, Ryan. Good morning, everybody. Yeah, it's going. Patiently waiting for what's to come, I guess. The markets are reacting more to geopolitics and stuff. If we look at bonds and commodities and so on, FX has a bit of difficulty to make up its mind, it seems, in those markets.
Yeah, very much so, mate. And yeah, a few moves going on. Geopolitics, China still in the mix as well. So lots to get stuck into, and stuck into we shall. Right, let's go. China has been out with a couple of headlines. One of them being that they may be going to start taxing the ultra rich for overseas investment gains. So it's a bit of a double-sided play. That one, it might be on one hand to try and encourage those rich to invest back in China. Maybe they'll offer some sweeteners for bringing money home and investing at home rather than abroad. But also it has the potential maybe to see outflows of profits that maybe have already been repatriated back to China. We know that getting money out of China when times are looking bad or tough is something that a lot of people do. So we might see a bit of two-way move on that. They're also looking at maybe cutting their deposit rates as early as this week, which again may cause some investors to go looking for better yields elsewhere, potentially outside of China, particularly as they're cutting rates and easing while there's better rates to be had elsewhere. Maybe they'll go to Japan, K, where rates are rocketing.
Oh, yeah, actually, the 10s are 2 BPs higher than yesterday. Wow, I didn't notice it yet. So
yeah,
maybe.
Market.
Well, you know what? It comes as a bit of a joke because the rates in Japan are still very low, but they are a destination for some Chinese funds. There is a bit of a relationship going on there. Chinese do love a little bit of Japan if they are in doubt about anything else. And as a matter of fact, if you look at dollar yen being lower and dollar China being higher, it may not even be such a stupid idea.
Yeah, no, quite possible. And we'll have to keep an eye on those flows, perhaps, particularly if the Bank of Japan does indicate that they might be taking rates a bit higher. Over in the UK, well, all through UK and Europe, we had a ton of data out this morning. We'll start off with where is it? The UK data. There we go. Jobs data, which is all a bit dubious at the moment. According to the ONS, external sources have indicated that the labour force survey is likely overstating the increase in underlying employment growth. But we can only go on the numbers we've been given. So there was a slightly higher claimant count there, just under 28,000. However, healthier looking 3-month rolling employment change coming in up 373,000. The unemployment rate ticked down to 4%. So that was good news as well on the face of it, even if it's overstated. We may have to wait for a NFP-styled big revision to come swinging its way over once they manage to sort this out. They've only been trying to sort this out for 8 months so far, but I'll stop there before I start ranting. On the wages front, the numbers came in as expected, confirming drops from the prior month, so 4.9% ex-bonus wages, 3.8% including bonuses. So easing of wage pressures there. The government obviously won't want that to move too far because they will want to see real pay growth, much like everywhere else. But on the BOE's side of things, that at least helps them on the easing side of things. Still quite sticky up at those levels, particularly in the public sector. But yeah, things are going the way they want them to. Over in Sweden, you can see some data there, some bit of easing in some of the inflation measures. CPI 1.6% as expected, down from 1.9%. Some of the other measures coming down as well year on year. Ex energy 2% from 2.2, but up on some of the monthly numbers. We have had Riksbank's Theden out, or the governor out, saying it's wise to cut rapidly but gradually. So they're going to continue their path there. Over in Germany, some price data. This is wholesale price index, sort of part of the PPI type basket, coming in a bit soggy, down 1.6% year on year. Another loss on the month, down 0.3%, was expected to rise. Final numbers from France and Spain. France actually going further, seeing a further loss there. The flash number was 1.2 for CPI, came in at 1.1. The Eurozone measure, flash number was 1.5, came in at 1.4. So softer than the flash numbers. Spain pretty much matched all their numbers between the flash and the final. Both of those below target. France well below target, which might get the market thinking about what's going to happen this Thursday with the ECB. Obviously a cut pretty much nailed on, but this data is going to be played in terms of what it means for the future. Are we getting back-to-backs? Will they tout a 50? Who knows? That's the mystery that we will play this week. What do you make from that data, mate? Are we going to be getting a 50 from ECB?
Well, I don't think there will be enough support to go 50. But so the base case is 25. But as I said as well in the room this morning, if you look at Germany and France, and France is clearly slowing. Yeah, I think there may be a bit of a risk in there, but I wouldn't put the risk at 50-50. I still think it's they won't get enough support for 25. But if you look at the two engines of Europe, they could do with a 50 basically. Yeah, so a certain percentage of risk. I would say that they go big. Has to be said that they are already well below the US rates, and regardless what everybody says about independence and only taking care of their own kitchen, it's we know that they look at each other. So perhaps a bit in respect to what the Bank of Canada said, they are looking at perhaps the difference between the interest rates. So if they go 50, they are immediately going to be quite low, right?
Yeah, they'll be getting pretty close to their neutral rate.
Yeah.
If they go at 25, that will put the deposit rate 3.25 this week. If we're running a rule of thumb, maybe somewhere 2.5% for the ECB, that only gives them, 75 pip worth more of cuts. 3 more cuts of 25. So I've been saying that the risk for particularly the ECB is if inflation undershoots. That risk is something I'm pinning for 2025. But given the way it's going here, we could have that risk before the end of the year, mate.
Yeah, absolutely. We see the odd number here or there, a little like small green shoots here and there, but they are secondary numbers. If you look at the overall growth numbers, that's still remaining extremely anemic, and so that doesn't how shall I say it? That doesn't alleviate the risk of going for that one big one. I think there is a risk for them going 50 this week.
Hello, have we lost you?
No, it's not. Is it a week for the outlook and stuff, or?
What are we? October? No, that's.
It's going to be December. Yeah, we had the one in September.
Yeah, we had the one in September, so it's December the next one. Yeah.
Will they go 50 on a non projection meeting? I don't know, mate.
Yeah.
But I do think that there's a risk. Yeah.
Yeah, I mean, you know, you have to take the other side of the coin. You got countries like Spain, whose inflation is much higher, you know, and going up. I mean, and then the other risk is that the ECB have said that they expect inflation to rise into the year end. If that doesn't happen, they're gonna be in all sorts of trouble with expectations going into that December meeting. But plenty of time to see whether that happens or not. Moving over to the good old UK, the PM was out waffling at some investment conference thing yesterday, where the Chancellor apparently announced £60 billion worth of investments likely to come in over God knows how many years, and half of it was pre-negotiated anyway. But there we go. So PM Starmer says that speculation on the budget is getting wide of the mark, including the speculation that there's going to be a 39% capital gains tax. The Chancellor is playing typical politics, where she's saying that they won't raise taxes on working people, but keep silent on where the taxes are going to be raised. So it looks like it's all going to be piled onto either the very rich or firms as well. So she's not going to be piling stuff on low income earners, but you can bet the rest are going to get hit on that, and that's probably the concern for a lot of people at the moment looking at the UK. Over in the US, Fed's cash and carry says the recent jobs data shows the labour market isn't weakening quickly. Monetary policy's future path will be driven by the data and the US's economic performance. Further modest rate cuts appear appropriate. And this is growing US debt will lead to higher interest rates. And then a nice comment for Bitcoin. He says Bitcoin has been around a dozen years and it's still useless. That's one thing we can all agree on, I think. Fed's Wally Waller says we should proceed with more caution on the pace of cutting rates. Data warrants moving to a neutral rate at a deliberate pace. There is considerable room for cutting above the neutral rate. Says hurricanes and strikes could reduce the October payrolls number by 100,000. So we're well into weather guessing the NFP this time. I might have to do a little byline, K, on the NFP competition for weather-related guesses. See
you want to introduce a number of liters of water per square meter or so, yeah, an additional
something.
yeah.
And I don't want to make it any more complicated than it is. One has to go through and count it all. So maybe I won't. Anyway, Waller says that we are in a sweet spot now, and we have to keep it there. Over in geopolitics and all this Iran-Israel stuff. So yesterday, apparently Iran had whispers through to the US government saying that if Israel's response to their missile attack is limited, Iran will see this round as closed. Well, fair enough. Please only bomb us a little bit and we'll call it a day. Netanyahu apparently told the US that Israel will strike Iranian military targets, not nuclear or oil targets. That came about last night and got oil dumping lower pretty quickly. Since then, he said, or his office has said, that we listen to the opinions of the United States, but we will make our final decisions based on our national interests. So also, apparently the cabinet have come to agreements, or some ministers have reached agreements on the intensity of the action against Iran and the timing, but is awaiting the full approval of the cabinet over in Israel. So at the moment, as things stand, we are still waiting a response from a military response from Israel, but at the moment it looks like it's going to be limited in its action. It's not going to hit any big things, and potentially puts maybe a bit of an end to this part of the hostilities directly between Iran and Israel. Whether it stops all the Hezbollah stuff and all the rest of it, probably not. But that might just calm down markets a bit to know that Israel and Iran aren't going to go completely head to head or escalate the conflict on that part as well. So keep an eye on your risk trades for that one. Other than that, a bit quiet on the old news front. Kay, you got anything else?
Yeah, on the news front, it has been indeed relatively quiet. Just one thing that popped up on Bloomberg that I saw was that some central bankers, some of the lesser ones, they were apparently at the London Bullion Market Association conference yesterday in Miami, and the central banks of Czech Republic, Mexico, and Mongolia, they said that they are still looking to increase their stash of gold. So that the plans are for those central banks to continue to increase their gold holdings. I don't know whether that has supported gold through those, let's call it all relative, right? Relatively milder war comments between Israel and all the others. It may have kept gold a bit higher, because I thought, I mean, if you de-escalate just a bit, perhaps gold could have been a bit lower. But central banks saying that they increase their gold holdings will probably or possibly have held it up. And I know you are still a bit long for the time being. So I mean, you've got good company having the Central Bank of Mongolia buying gold, Ryan.
Yeah, I might find out where their stop loss is and stick mine a couple of bucks below it. But yeah, it's gold's doing what it needs to do, really. It's looking very similar to how it performed when we were a bit lower down. Let's go into 1 minute, 1 minute charts. Here we go. So we had this set up at play previously, and it's looking a bit similar what we're getting up here as well. Yeah, didn't quite get up to that high level around the 70s. It's pulled back. This is a bit of a neutral zone around here, 40s, 50s, where there's nothing much going on. This is where it likes to sit and do nothing. I'll be interested to see what happens if we do get a move back down to this 2620s level, whether it shows up again as support or whether it's going to be washed out and this becomes the important level. But yeah, it's doing all right. See what happens. And it's either going to go up or it's either going to go down. There's nothing we can do about that. Right, Ali, what you up to? Kiwi, short Kiwi. Not confident. Oh, you're not confident in your trade because there's perhaps some big guns trying to stop its downfall. If you start thinking about trades in those terms, what mysterious figures you're fighting against, Ali, you're going to drive yourself mad. The Kiwis come down an awful lot. So if you're shorting down around here on the back of after it's done a whole lot, you've hit a big support area, it's got to do a lot more. So that's what your problems are when you short a market that's already moved a big chunk. It's not going to go one way forever. And that's why you look at where the market's going to pull up. So Kiwi has now looked like it's trying to make some sort of bottom here. Bounces aren't that great, and the break points are being respected. So that gives shorts, a bit of conviction that they can stay in the trade. If we're breaking back above 61.10, then something is potentially changing. Otherwise, your battleground is from here down to 60.50, and your TP is around about 2 pips above that level. So if you haven't taken some profit already, mate, you might want to think about taking some on approach to that in case you see a bounce. Aussie dollar is the same. It can't get through the support down here, the 67 figure. Okay, so again, another one. It's had a move, and now it can't go any lower. So this is where you have to be careful. If you're short here, you're pretty much facing a two-way risk. Either we're back above 67.50s, that seems to be the level, 50.60, then you may be starting to turn around this move. Otherwise, the potential is for it to go lower, but it ain't going lower unless it can get through 6,700. And we know there's a ton of tech down here. That's a bit of a different picture to euro dollar, which is, again, another one with a big move, but it's showing no signs of stopping. We keep edging down. It's a bit of a grind. It's taken us, we're in the 6th day now, moving from 110 down to 108.80s. So going on 6 days to move, 120 odd pips. It's a slow grind, but it has not yet found where it wants to meet decent support. Is that going to be down here at the 61.8 fib in my zone? Who knows? We'll wait and see. No one knows. But again, if you're short, these are the levels you want to be looking at to maybe take some profit, just in case this is where we find a low and start bouncing from. But at least you know you've taken some off, maximize the move, and then you can pull your stops down and protect the rest of it. So can your Kiwi go lower? Yes, it can, but you know what it needs to do to get lower, Ali. So good luck with that one. I've not got an awful lot on the cards at the moment. My Aussie Kiwi, that's having a little bit of a mooch down as well. Down just now, testing this level 110, 110, 15, 20-ish. Been a bit of an on-off level, goes back quite some way as well. So I'm on the right side of this one. My position isn't overly large. I haven't managed to add any more. So it's only a little bit I've got running at the moment, but I'd rather it go into profit than not. So we'll see what happens with that. But the Aussie now weakening a bit more than the Kiwi in this one. What else? Let's have a quick look at cable. Well, I'll look at Euro Sterling. I'll let Kay have a look at cable. I'm sure he's got that on the books. This one's bleeding lower a bit, coming back down towards these low points down here. The failure 84s, 84.20s, all the way up to 30s. And now you can see previously last week we had it holding below this 84 level. So while below there, I said it doesn't rule out further downside. But let's see what happens if we get down to these lows and the 83 figure. Potentially we're just going to mooch around. Some of this is on the back of those UK jobs numbers not looking overly bad, or they're looking pretty healthy, and then obviously this softer round of CPI from France particularly, so a bit of pressure on the euro there. Just to remind you, we do have Canadian CPI coming up later today, so if you're trading a Canadian dollar, keep an eye on that one. CPI is expected to come down to 1.8% versus 2% price. So again, that will put it, well, they've got a 1 to 3% target range with obviously 2% the midpoint. So that will put it under 2%. But while it's above 1%, that's not too much of a problem. And then we've got all the 30,000 core measures, which look a bit more stickier, mainly expected to come in unchanged, or one of them even expected to go up. Keep an eye on the BOC core, because that is probably one of the cleanest core measures to look at, as opposed to what these poxy things mean. Kay, got any expectations for the Canadian data or the loonie later?
No, the only thing is, and I've been saying that, is that it does look like Canadian dollar is more vulnerable when things are going soft for Canadian data than when they are showing better numbers. Now, we did come into. I've got a bit of stuff going on here. Yeah, from here up to that even 139, right? Yeah, it could be enough if you look at the rest of the dollars as well, coming back a little now. But for the Canadian dollar itself, it does look like the market has its grip on a bit of a lower Canadian dollar, and perhaps will want to trade everything that comes in weaker, perhaps a bit more active than if the number would surprise. Now, we look at those data, and you are. I think what is it? They're trimmed that they especially look at also. That needs to get closer to that 2%. If we're gonna get that, then I guess it's going to keep the expectations for cuts wide open. McClem has been a bit on the dovish side still, and yeah, the market has taken it for as face value. So yeah, anything weaker, I think, may have a bigger impact than something stickier. That's what I kind of think going into those numbers.
Yeah, and you have to know the game we're playing for the BOC at the moment. We're playing the 25-50 pendulum for these guys. So if it is a real soft number, then we're going to be ramping up 50 cut calls. And I really don't think a 50 is justified from those guys. But then I didn't think a 50 was justified from the RBNZ, and they decided to go one. So don't listen to what I've got to say about things. But yeah, I think I would potentially try and fade at 50 BP expectations unless the data's horrific on that one. What do you think?
Yeah, I think we're coming into data, but we've heard a lot of, I've read a lot of stuff saying that dollar CAD is on its way to 140, so that's another 200 points. That's why I'm saying like it does look like the market will want to trade softer numbers harder than perhaps a bit of a sticky one. Just because of McLem being so dovish still. That's still what I'm thinking. Hey, by the way, Angela was asking about the RBNZ. I don't know, Angela, where you saw that or needs to talk, but I'm on the RBNZ page right now. I'm seeing Assistant Governor Karen Silk on the wires tomorrow, but I don't see or before the 24th on their page at least. I don't know which kind of calendar you were looking at, but I don't see or on the wires before next week, Angela.
Yeah, okay, we'll have a look
All
at
right.
that. Maybe it'll pop up on that somewhere. Yeah, I forgot what I was going to say now.
Yeah, we're
Yeah,
moving on.
what surprised me this morning is that the CAD isn't weaker on that big oil move. You know, oil's done what, $6-7, $6 odd. Where are we? Up here.
Yeah, but it's done the
Yeah.
move while it was popping out. And what I've noted as well, I mean, those few days that I was off, is that the Canadian dollar didn't really get too much support when oil was rallying on the back of the stuff, right? So that's why I'm saying it looks like the market still wants to trade the weak side of it. Yeah, we'll see.
Yeah, that's what I mean. You would have thought oil dollar CAD would have popped a bit higher on a big oil move like that. I mean, when it's oil's just mooching around, you know, CAD can be off the bus, but usually when you get a big move, you see a bit of reaction in CAD, but nothing. It stayed in a pretty tight range since late last night. But anyway, let's see. Early days of what's going on with this one. Do you want to take it for a couple, mate?
Yeah, just a couple. I'll talk about. I'll comment quickly on Ali's Euro Swiss. I personally don't have anything in this one. But yeah, Euro is, if there is a Swiss pair to belong Swiss, I think right now it may be versus the Euro, because the Euro is still, if you look at the rest of the dollars having suffered a bit, the euro is hanging around the 109, even though it's like 25 pips off the low, but in the euro dollar. But yeah, euro Swiss capped. It looks as if we're building a bit of a triangle here. Your stop, you say, is above 94.60. I think 94.40 is already a good enough level to monitor. On the top side, Ali. So for as long as we are below there, it looks all right. And even on the real tight side, because now we are back below 94 the figure, it's already 94.20. Could be already enough on the euro Swiss. The dollar Swiss is kind of the other side. We've moved above this level finally, but it's again slowing down. We've seen other dollars also coming down, dollar yen, etc. Dollar Swiss is trying to make up its mind here, whether we are going to stay above 86 or not. I said in the room yesterday, I'm a tad long. I took some, and luckily I took a piece off when we were trading here on the first leg higher yesterday. So I'm okay, and I'm just stupidly put my stop below the figure and around 90, and see if it holds or not. That 86 figure 5 on the dollar Swiss is pretty simple. I wouldn't see why the dollar is selling off, but we do see the yields coming down a bit. And also, as we can see, we're seeing the US and the EU yields as well coming down, although and at the same time the yen tends pulling up just a little bit. I wonder if there's not a bit of rebalancing there going on, people taking profit on short yen positions, and dollar yen really responds to that flip-flopping in the yield differentials here. So keep a close eye on that one. Um, Talking about the yen, we rejected that 150. So there's a few things here. As you can see, short term, we're a little bit on top end of a wedge. Secondly, we stopped right in front of 150. We did not trade 150, so that may hint at there being a bit of a few barriers again after we started to come lower. Perhaps some people have placed some barriers up there again. I don't know. But stopping right in front without seeing 150 is perhaps telling. I think also people are still worried about more comments if we hit above 150. I wouldn't go as far as saying we are going to see straight away interventions, but yeah, the market is taking profits on a move on a basically 10 big figure move, right? Also, finally, and yesterday it didn't filter through, but we saw, or it's starting to come back down. We saw commodities coming down. Usually, that should be a bit supportive for the yen, okay? Because they're still importing a lot of stuff. So I think there is scope for some more correction in yen pairs. I would say first little level here, 148.65 as well. But then I would look at what's happening if we get back down to low 148s. That's where it starts to get interesting. Of course, if we see a deeper move, we could go all the way back down to that 147 and a quarter. But for the time being, I would attribute this to profit taking and following what's going on in lower energy, lower commodities. That is usually underpinning the yen somewhat. Okay. I saw Dimitri's asked about the rand. It's a tough one. Did you say that some 38.2 is that this move, the 38.2? It's supported around but that's rather the 50% around 1735 of this leg higher. We've tried it a good few times, okay, to get back above this 1759.60, and each time we're running out of puff. And so I've tried it, but let it go last time as well, since it was capping around here as well. No, it's a daily, okay? You can go on shorter time frames, but I think for this kind of emerging market, I'm not in there for like really the small pips intraday. I'm rather looking at a slightly wider picture. Look, I think we should be finding support on dips, but we have to acknowledge that we can't hold those rallies. And for me, so there's this level here, which is also the 23.6 of this whole move lower from May into September, is at 1770, 1771. And I really think that we are going to need to break this one, Dimitris, to continue. And I'm keeping a very close eye on it, but it's one of those where we are going to have to break a level here and hold it to go through, right? It's a 38.2 resistance from the last one. Well, is that here, your swing? This one? From April down to October? I don't know. Some people are looking at various stuff. I'm trying to keep it as simple as possible and not go into too much details. But okay, this is what I'm looking at personally. I'm just seeing that we're running out of steam here around those prior lows here, and so anywhere between 67, 70, 71. This is where it's at play, I think. And look, what we're doing right now is we are already back below 1760. Okay. Right. You wanted to look at sterling yen. Where is my sterling yen? I haven't looked at it for a while, but you know what I said when I came back from my week off. There's a lot of yen pairs who struggle with daily moving averages as well, and the 100 DMA on the sterling yen looks to be one that we can't close above right now. So anywhere 195 and a half, 195 3/4. Reggie, I mean, keep an eye on that one. This is probably where you want to have a look at it. The issue that I have with sterling yen as such is that when you look at euro sterling, for instance, it's gradually seeping down again, and sterling is not offered. It was like people were managing their positions and rebalancing their positions for a long while, but I I don't know whether sterling yen is when you want to be long yen or so. It's not the currency pair that I'm going to look at first, because I'm finding sterling getting back a little bit of its mojo, and also, as I said this morning, it could be that sterling is buying back some strength until we actually get to the budget. So there may be an extra 2 weeks in there. Your euro sterling is going to have a big impact on whatever sterling cross as well, because if you get back down on a 50 BP cut by the ECB, for instance, if we get that surprise, your euro sterling is gonna go back down to those prior lows, right? And that's probably going to drag all the sterling crosses higher. So unless you want to be long sterling, and then perhaps you look at that sterling yen again, but it's not my favorite pair to trade right now. Okay, so that just about the sterling yen, and I think I've sort of said what I had to say. Ryan already covered gold. I was a little surprised that gold was not a tad lower on those Middle East Middle East talks, to be honest, and but it's holding up really well. Um, yeah, I think perhaps the US market will give us a bit more clarity coming online. We're turning around. It's still very big, but we're turning around some interesting levels there. I'm not going to take a side right now. I wouldn't be surprised if we see it a tad lower again, but then the rest of the dollars is a bit under pressure. But okay, that's it for me for today, Ryan. Back over to you, mate.
Thank you very much, mate. Good stuff as always. Well, hopefully we've got you set up for the day ahead, so we'll call it a day for today. Keep your heads up on all those headlines dropping, particularly from Israel, if they're close to their retaliation. We'll see what that is. Have a great day, everybody. We'll see you all tomorrow.